All right, here we go. So we are recording now. This is the update for the markets on we're on May 6th, and we are going to be going over some basic things. Let's go over. Let me switch a few things here, and we go here. All right. So as always, we're gonna be looking at the SPY first, the 1 year chart. I want you guys look at and focus at these two lines right here. We always talk about this blue line, this rising line right here, and you also have this one over here. So those two right here. All right. So we have a ascending wedge that broke out here, and then that's how you develop this new line coming down this way. So this is the as you zoom out, we basically broke above this line, which it was at the 200 moving average, and this is when things became more bullish, and everybody started screaming that this is a new bull market and that we are going up. And so anybody that has been trading this market for the past 3 years was looking at this line right here, this light blue line right there. At 431, you have a resistance, and that hit there last time, and it dropped over in August 2022. And from there, we were able to break above it, start making a new trend line, a new wedge, rising wedge, and rising wedges break to the downside. A couple of things that I'm looking at this in terms of both bullish and bearish. I'm going to give you both scenarios. In my case, as you guys can see here, if you can ignore this part, this would be called a part of a head fake per se, because we have not been able to break that top at 431.73, and so we are stuck in this wedge. This wedge hits the bottom of this right here, this blue line. 348.11 was the low, and then from there you go back up, you hit the line again. When these two lines crossed, double resistance again from the rising one and the depressing one, and it met right here, and it got denied for a short period of time, just making a higher high. It went and retested that line, and then we got a black candle or a fill candle, and it dropped again one more time. What it did is it maintained its bullish momentum because it kept scraping that line. So it bounced right off of it and then back up to the point that we are retesting. We did not get to retest this one. You see that? That has not been retested. That has not been retested. Why? Because we are being stopped at a line, which is this one that we talked about, and I'm going to extend it to the left, and that line is the orange line that we've been talking about. And that orange line is in place because, as you guys can see, this orange line right here, right there, it acts as a resistance here. And if you ignore this is the head fake that I'm talking about. And then you are back underneath that line. You have not been able to cross that line for a very long time. So this is a small head fake that does not count. Now, orange line, we're right underneath it. We hit it, came right back down. This time we broke this support, which was a nice bullish momentum that we had going, and it broke below it. Then you have to be looking at this light blue line again. This one right here, the one that comes down all the way from the yearly, right? From the 3 years or so. I will show you in the 3 year chart. It's a little bit more clear. So you guys can see that we kind of surpassed it for a small period of time, but we were able to regain on top of it. And so we bounced right off of it. Really, we were one day down, and then we bounced right back. So that doesn't count either. It didn't stay down there. It didn't get 2 bars, so you don't get confirmation. So which tells you that the bullish momentum is still not dead completely, right? Don't get too excited now, because now we're gonna look into detail on what's happening. Now, were we able to regain this blue line? Were we able to regain this ascending line? We have not. And in fact, this line can now become a resistance. Look in here. It hit that, being rejected at this one, come back down, go back up, rejected by the orange line, and then it comes back down. Now you are right below this line, right below this line. We have not been able to break that. We have not been able to break this line right there. So, okay, now rejected here clearly. And after you guys rejected there, we were able to come down here. You see that white line I was talking about during the day? That white line is basically right above the 50 moving average. But the reason why I have a white line there is two things. Number one is a dark pool that is very heavy as a support, and number two, it's bounced here before. So since it bounced here before, look at that. Bounced here before. It came down. It came down. It tried to push it down, and then it didn't. It got right above the white line and it pushed on up. Now, this time around, we are being supported by that white line. It's still above the 50 moving average, but the red signal is still prominent on the MACD. It's still showing us a sell signal. Now, you see this line that crossed here, the blue line over the white, remains below the white, which tells me there's still some bearish momentum to it. Now, the RSI is not overbought, it's not oversold, it's just right in between these two red lines, which is like right in the middle. It could go either way. Now, what I told you guys on I was looking for a bounce simply because I'm looking at this blue line here, this one right here. I'm looking at the bounce because I know that once we got above it, we were going to get a momentum to the upside. How much? Enough to go retouch the green line. Why is that green line important? Well, because it acted as a support here, rejection here, and from there it rejected here one more time. It tried to get above it and it got rejected, and now we are at the line being rejected. So that line is viable. That line is important. You have to be paying attention to it. If you're able to break this line on Monday, Tuesday, or Wednesday with the CPI, it is likely that you're going to go retest this orange line. Now that orange line is the line in the sand in which if you cross that line, you're going to get some momentum to the upside. Why? Because that line has not been able to be crossed for a very long time. You would adjust it a little bit here, maybe up to the red line. I have a second line and therefore 1984, but that orange line, we have not been able to break it since this time. So if you break it, you're going to get more bullish momentum. If you break it and you get up here to the blue line again, and that's around 420, which is what I'm expecting, 420, 419 and change, you're likely going to get rejected at that line. If you get rejected at that line, you're going to get more bearish momentum, and you're going to now, this line will now become resistance. And if we end up breaking down once again to retry to break the 50, which will be closer at that time, which is right here, 50 moving average, if we break that, the bullish momentum will be fading. If you break the 50 moving average, start rethinking things and start shorting, because the fall is all the way down from 50 to the 200. It could go in an up down fashion. It could give you a red candle, then a big green candle, and then come back down, and things are gonna get a little bit jittery on the VIX and stuff like that. Let me look at 3 years so I can show you something. On the 3-year chart, we get this right here. We have a hammer and then a hammer. Now this hammer is red because it actually has a wick on the top, which means that it push, and then it actually got pushed down from the top. Now this tells me that on the 3-year chart, the bullish momentum is slowing. Hence, I'm in puts. I'm going to try something out on Monday, Tuesday, Wednesday. Why? Because I think that the MACD here is cooling off on the 3-year chart. I think that this is, although it is still above that trend line, it is losing momentum. If you're able to stay above that line on the 3-year chart and go break this orange line, then up we go. We could go up higher, much higher, for retest the 430 or so. But in the meantime, I think I want to wait to see if this is actually going to play out, because the MACD is slowing. So it wouldn't surprise me if we are able to break below this one right here, that one right there, and we get underneath, the same way we're able to bounce right from here and get back on the channel, the same way we can be denied here and come back on this channel right there to the downside. And if we ever do, things will get very bearish from here. It'll go down all the way down here to 377 and change, even lower, 370. A lot of people are talking 380, 375, 380. And if that's the case, you probably end up hitting here and then do another wave up. We'll put you back around 400 or so, and then we will see how the economy is around that time and all of that. Now, let's look around. QQQ. I have not done any research. I've been working. I've been busy. Okay. Fibonacci. Actually, you know what? Since we're at this, you might as well. I removed some lines, but let's take a look at real quick. If you do on a yearly chart, couple things. If you grab, actually, I'm not gonna be able to see it. If you grab the very top, and you draw Fibonacci, this is gonna give you the Fibonacci for the whole bear market since it started and all that. Fibonacci. This computer. Fibonacci retracement. You draw it all the way down here to the bottom. To the bottom, you're gonna get those red lines, right? So now you're gonna go in here and start zooming in. As short as funny enough, guys, I want you to pay attention here. What does it say here? 50% Fibonacci. That is my green line, okay? The 50% Fibonacci is exactly where we're bouncing off. We're hitting that line and the market is retracing back. That means we are at the 50% Fibonacci for the whole retracement. Now, if you look at 180 days, you're going to see that the 50% Fibonacci right there. We've been denied there once more. Now, it can drop all the way down to 38.2%, which is around the 40, what is this? This is 398.24, 398.27. You see it right there. So it is possible that that can happen. Now, remove that, right? I'm going to show you another thing. That's for the whole year. For the whole year, that's what you're looking at. I'll remove it just to avoid too much noise. Now, what we're going to do is we're going to go to the yearly chart. And then we're going to draw what happens if we get from on the bottom of this market, what happens if you grab the bottom of this market and you put it all the way to the top. I know it's backwards, so you put it all the way to the top. That's the high, right? That's the high. Just ignore the numbers. I know they're backwards. Okay, so if you look at it and you zoom in, that's too zoomed in. 180. Okay, the drop would be somewhere down to 401.18, which is the 23.6%. But right, if you flip that, you're gonna end up with the 78.6. So at the end of the day, you're ending up with this about the same number, which is around the 400 area. Okay, 401.35. This one is giving us. So keep in mind that there's a chance that we're gonna pull back just based on Fibonacci retracements and all of that. Now, remove this drawing. Oh, I had to remove something else. Remove the drawing. Okay. Let's look at the Qs. On the Qs on the yearly chart, I had the Fibonacci from the bottom all the way to the top of this movement. If you click here, not sure why I keep getting this note thing. Doesn't let me grab it. For some reason I keep getting this note thing. I've never had that before. That's weird. When I click on it, I get this freaking note. It doesn't let me move it. It should be under edit, but it doesn't let me. Hmm. Okay, it's acting up. Um. Anyway, I won't touch it. I won't touch it. The fact is that the cues also, if you zoom out to the 3 year, this looks like, again, we had this line here that was a support, that was a resistance that we broke above it, and now what you're getting is a wave down, a wave up, a wave down, a wave up, and it looks like it's not complete. Same thing we've been talking about it for a while. It looks like this wave is not complete, and it looks like it can go all the way up here. That's what it looks like. Now, on a bearish note, you can say that as long as you do not make a new high, which is this line 330.39, as long as you stay below that line, then you have a lower high. And if you have a lower high, then it's likely that the cues are going to pull on back. So that is the other part. The MACD is kind of cooling off a little bit. If you start looking at the year chart, the MACD is still red. You still have a sell signal, although let's get rid of this. Actually, you know what? That line, if you extend it to the right, you're about to go touch it again. Which, as you guys can see, I know this is the RSI and all of that, but if you extended it, look in here. Here, it acted as a support, and we went up. Here, it acted as a support, and it went up. And here, we broke below it, and it acted as a resistance, and we went down lower. Now, we hit it again here, and what happened? We went down. So look what we're doing now. We are going up. Is it likely that we hit this line again and then we go down? It is possible. And that would correlate with this. If we end up going up here, maybe to the 324, 325, and then I'm wondering why it doesn't let me grab this situation here. Interesting. Yeah, this is definitely acting up. It doesn't let me move it. All right. Let's look at DJI Transportations, Dow Jones Transportations, DJ. Let's look at DIA. Okay, I have this channel here on the Dow, and when you look at the 3-year chart, looks like that. If you were able to extend this channel to the left, doesn't give you any reason, so I didn't, that's why I didn't cancel left extension. So I always look around to make sure that I'm not missing anything there. But you do have a regression channel that looks just like that, kind of like this. You had this in the beginning. As you can see, if you would have drawn this and you would have extended it to the right, you would have known when the push is coming, because the second that, look, once one bar closed above it and the next bar gave you an inverted hammer, which says this is a no-go, it's not confirmed, we're going lower. But the second one actually confirmed it with a big bar, and that told you that a change of direction is coming. Now you see the cross here, the 20 and 40, and that will tell you that that momentum is changing. Now for the 3-year, the MACD signal is so weak, and it looks like it's weakening further. So although it did remount the channel and it's doing kind of something similar to what the SPY is doing, you are getting a double hammer again. Once again, double hammer. This one looks worse than the other one. Now, 1 year. Well, we're recording the YouTube, so we'll talk about it later after I stop it. Okay, so then we have here Dow Jones 1 year. Why are we bouncing? Right, you have a channel here. You have this channel right here that looks like it's being supported here. You broke below it, but look what happened. The 50 moving average supported it. The 50 moving average supported this move. In fact, the 150 as well. Look what happened last time. 150 support, we went up. Here, 150 resistance, we went down. So it looks like in the DIA, it looks like the 150 is the one playing, the one that it calls shots. Here, 150 support went up. Gets hit by the 50, rejects. Now we are supported at the 150, supported at the 50. This looks good on the 1 year. Now, this would generate a move up to this area again. And if it doesn't break this red line here, if it doesn't break that red line there, then that tells you that there's more bearish momentum. And if it breaks below this channel, you're going to see it try to retest the 50 one more time. How long it can take, that is the question. That is the part that we don't know. Because if we get good data with the CPI, then you're going to see the markets rally, period. Because everybody wants to see if the CPI is going to get stuck somewhere. If it doesn't get stuck and it continues going lower and we get a CPI of 4, 4.5 or lower, then you're going to see a push. Now, look what happened last time. It wicks right out. It wicks right out and it pushes. How long does it last? Not very much. It does a big push and it comes back down. A big push comes back down. This one lasted longer. And then so this one didn't. This one didn't. This one didn't. And now we're here. Are we going to get another red bar like this? Down this way? Are we going to get that? Or are we going to get a push that goes to retest this line on 341? And does it break above it and complete the channel up top one more time? That is yet to be seen. But on the 180, you guys can see that it was oversold, and that is one of the reasons why it started going up. Let's look at something important here. KRE, this is the regional banks ETFs, and this is why many things are changing here. Look, on the 3-year chart, this is this line right here. You see how I can even make this up. Look, I'll draw a line right there, and I'm gonna extend it to the left, and you guys see where it hits. Look where it hits, guys. I mean, let's come on. Look, a support there, a support there, a support there. So yes, even if you move it a little bit lower, I'm not sure what is happening with this thing today, but it's not cooperating. I cannot grab the line at all. Okay, I wonder if it has to do with this. Let me see. Oh, thank God. Genius. All right. Support, support, support. Extend it to the right. See where we're at. Look at that, guys. Dead on. Like I can't even make this up. It's dead on. Why? That is the reason why the markets are going. They're reviving a little bit. This is the reason why the regional banks are bouncing. Look at that. It's just bouncing off that line. How long can the bounce last? Well, if it doesn't last very long and we go retest this 20 and we get rejected, we're likely going to go see the bottom of this. Look at this white candle. This is what it's called, a white candle. And I'll show you guys a black candle. This is a black candle. This is a white candle. White candles, when you get this white candle, means that you get a big change of momentum. And it tells you that we're about to go up. Look, white candle played out here and it pushed on up. It is likely that if we fail this push, we're going to go down here and retouch that area. If we go retouch that area, there's going to be a lot of fears in the market because they're going to start talking about the more banks defaulting, more regional banks going bankrupt, and all these things. So that is very, very concerning. I know many people are like brushing it off and saying, "Nah, this is fine. Banks are going to be fine." This is the same thing they used to say in the past. Banks are going to be fine. Don't worry. Nobody's going to default. And then we went into a crisis. So okay, so we're doing that. Let's see what happens on the next few days. It's just oversold, and it's people are reacting to it. They're buying it. We'll see. All right. Look at the major movers. Let's look at the movers. Apple. Apple being one of the movers. I told you guys, if you go look at the video that I did before, a couple of videos that I did before, I mentioned that everybody and their mother was expecting this thing to fail at the yellow line. And I said, I think it's not. I think it's going to go past the yellow line, and I think it's going to go hit this red line right there, which is the 176.34. I don't think we're there yet. I think we will get there. If we get there, you see what happened last time? We hit it and we wicked right out. If you look at the 3 year, if you look at the 3 year and you extend that to the left, you're gonna see that a lot of those bars are hitting that. When I switch to here, now I can zoom it in. I must have touched something before. Now I can't. I must have touched something here. Interesting. There we go. And then when I grab the line, now it's working. Okay, good. All right, so 3 year chart. The highest that we're gonna go touch is this right here, 182.94. That is the highest possible point that we could ever touch. I'm gonna set up an alarm right there. Highest. Okay, and then my best guess is that we're gonna go touch this red line right there, 176 and change. And at that line, it's gonna fail because we've done it before. Look, I don't have to be a scientist to do it. We hit that line, got rejected, pulled them back, wicked right out of that line. See that? Wicked right out, came back down. Retest, rejected at that line harshly. Look, right at the line. Got rejected, rejected again, back down. Now, again, we tried again just because we're stubborn and we want to buy Apple. So there, rejected again, 176, we come back down. And here we are again, retesting. Look what we're doing. We are retesting the 176 area, number one. We are fully extended on the MACD. We're about to be into overbought areas at the 69.71. Let's look what happens when we touch that yellow line on the RSI. RSI, right here. What happens? What happens every time we touch the yellow line? Let's go back in time. You went over it. That was earnings, I believe, and that cost it. What happened? We pulled them back to the 20, right? To the 20, but you can say, yeah, but it keeps going up. Yes, of course. But these swings are harsh. This swing is from 129 down to 103. So that's $20. If you don't care for $20 and you're going to hold, and you think you're an investor and you're going to hold through $20, I suggest you don't look at the computer, because by the time you see Apple pull back $20 and you have a significant amount of money there, you're going to be crying and saying, shit, I should have sold. So up again, look what happens. Yellow, it touches my yellow line and it pulls on back. Same thing every time. Yellow, back. So we're about to go touch the yellow line. We're not there yet. I think we're gonna go touch it. I think we touched a 176 and a change. 176, 177, around there. 176.50, 177. Okay. If you zoom in on Apple and you look at the 1 year, 1 day, you have a big gap here. This big gap, which is likely eventually going to try to close it. If it tries to close that gap, it's going to go touch the yellow line. It probably at the yellow line, bounce up, try again, fail, break through below, and break back into the channel and start making it slow. It probably is not going to go all the way to the bottom of the channel unless there's a crisis. But the way the banks are right now and the whole debt ceiling crisis, it is possible that it can go there. Let's just not discard it. But the more likely scenario is that it pulls some back first to the 20 to retest. The 20 is around 166, which is the yellow line as well. And if it fails at that line, you will going to retest the 50, which lays about 160. The worst case scenario, I think that it will be pulling on back is about 150 and 148, 150, which is the 200 and the 150. Moving average. Now, I tell you, if you look at this chart and you have on the yearly chart, the 200 just crossed the 150. Okay, look, or however you want to look at it, basically the 150 crossed to the downside, and it did it right here. So that means the 200 is pointing upwards, and so last time it crossed that, you'd have to go back in time to do it, but vice versa. Look, see this cross? Okay, look at this cross. The 150, which is the bright green, and the 200, which is the red, crossed. But let's say the 200 crossed to the upside, right? What happened? We melted. What are we doing here? Isn't this the same thing? Doesn't it look the same? Red over green to the upside. Yes or no? This cross, does this cross look like this cross? I'll help you. It does. Okay. Did we have the 20 over 40? Yes. Do we have the 20 over 40 here? Yes. The thing is that it runs out of gas. Eventually, when it goes to touch that, it runs out of steam. And we're coming up to that line. We cannot be naive. We cannot be blind about it. Last time it did it, it had a sharp curve down, and nobody saw it coming. It was green, 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 green. Beautiful. Everything is great. Bull market. And then back down. So unless you go and break this new high and start confirming a new high and hit that line and start going up higher, then you can start arguing, okay, this new bull market and all that nonsense. I don't see it. Okay, Nvidia. Since everybody's looking at Nvidia, everybody wants to trade Nvidia. Nvidia is coming up to a resistance as well. And I tell you guys, if the whole market, if what has been carrying this market, what has been carrying this market? Tech. About 7 names have been carrying this market. And so if I tell you that all those 7 names are becoming overbought and are reaching extremes, what's going to be the catalyst? What's going to be the thing that brings us higher to break new highs and to go into a bull market? That's what I don't see. And if you can see it, then you can tell me. But I don't see what it is that is going to cause that. If you look at Nvidia for the 3 years, guys, again, it's overbought. What happened last time we were this overbought? A big disaster. Okay, there was a big drop. Now, would I short it here? No, because we're not at extremes. Look when it gets to extremes at 84.93. We are right now at 75. Can it go higher? Yes, it can. It can go up higher. Look in here. It was at extremes and we kept going up, right? It was at extremes and we keep going up. But you would have to look at this is past, this is before the whole mess. When you start looking this way, when you get into extremes, you pull on back. For example, here, look, this was red here. Doesn't look like much because it's a 3-year chart, but it dropped from 230 down to 195. Okay, that is a lot. Now, here, drop from 208 down to 177. So yes, every time you're overbought, you're likely to pull on back. The pullback is coming. I just don't know if we're gonna go touch this first or we're gonna go retrace back from here. But all I can tell you is that the companies that were pushing this market up higher are becoming overbought and overextended. So now we have this here, 78.6% Fibonacci. If you grab the top of the move and you bring it to the bottom, this is where you're gonna get. And you are coming up to 78.6% Fibonacci, which is at the 294.66. My friends believe that we're going to go touch 300, and from there we're going to retrace. That's the number that everybody's looking at. 300 seems to be the number that everybody's betting for. Well, sometimes the market stabs you before you get to 300 just because you were looking for the 300 mark. We will see how this plays out. I'm staying away from it simply because there's too much buying pressure in it, and these buying signals are not giving me any comfort. This is a buy signal, which is very faint, is followed by a red signal, and then another buy signal. So possibly go retouch that area right here. Nvidia at 294.66. Let's call it 295, and that'll be close enough to the 300 mark that everybody's looking for. If you look at the 1-year chart, which we are on right now, you're not completely overbought, right? You could go up here again, 300 or so, and then you can get a pullback. These pullbacks don't last very long. 280 dropped to 264, and it's still on an uptrend. It's very bullish. It looks very bullish. It's got the 20 over 40 and over 50. The 50 is above the 150, which is bullish, and above the 200, which is bullish. And now the 200, where am I? Right here. And then now the 200, although the 200 for the long term has not crossed, the 200 will need to cross the 150 and start pointing upwards for the long term to also be bullish. It's not just yet, but let me take a look. Last time the 150 crossed to the downside, we just pulled them back a little bit, retested and pulled them back. Right now we have the 150 is above it and it's pointing upwards. This looks bullish. The just Nvidia looks very bullish. Meta. All right, Meta. We talked about Meta. This is what Meta has been doing. It goes, it leaves a gap, it fills half of the gap, and then it keeps running. Here, left the gap again. It hit this time. It hit a dark pool, I believe that is, and is coming down to probably fill half of that. Again, probably fill half of that and retest that area, 245. If it ends up breaking, it can go as high as 287, believe it or not. As crazy as it sounds, if you look at the 3-year chart, there's a huge movement to the upside if you end up breaking that white line. So that'll be very interesting to see. If you're able to break this line, you're gonna get a big move all the way up to here, 287, 288. As crazy as it sounds. Now, probably the move is gonna die somewhere around that area, somewhere around this area, to 300. Let's even call it 300, because look, so you had a bounce here. You got a red MACD on the 3-year chart, and then it went green, right? Can you argue with me and tell me that this MACD is growing? You can't. This MACD is slowing. So MACD is clearly slowing on the yearly chart. So there's that. Number one sign. Second sign. Are we overbought? Yes. Are we touching the yellow line? Yes. What happened last time we touched the yellow line on the 3-year chart? This. A huge drop. Okay? So yeah, but yeah, below back in time. Yeah, back in time it was here. And then when you touch that line, you pull back from 294 down to 247. It's $50, guys. It's 40 something dollars. So the move, although the move doesn't look very significant, because I have it on the 3-year chart, but the move is there. Now, every time you touch that line, and we're touching it right now, you're teasing this line, and every time you tease it, you get into trouble. It is likely that this is a head fake, and if we do not cross this 245 area, likely going to fail, get back underneath this line, and then that's when shorts are going to be stepping in. Shorts be stepping in, probably drop all the way down to, I don't know, 50 maybe first, 160, retest the 50, or maybe to the 20 to be friendly, retest the 20 first, at 191, try to bounce off of that, off this line, fail, retest 40, try it again, fail, 50, and then one of those days drop. Possible. But as of right now, another stock that has been driving the market, that is becoming oversold, overbought, and overextended. Another one. Now, 1 year. All right, the 1 year looks like that. We talked about it. It's overbought. Next, Google. Okay, Google. Can Google carry us? Is the question. This is what everybody wants to know, right? Let's look at the 3-year. 3-year chart. Give me a second. Okay. 3-year chart on Google. Again, same thing. When you look at the 3-year chart, can you say, yeah, but this looks bullish? Okay, great. In Google, out of all the stocks, that 20 is still below. Looks like it's about to come across. It looks like the MACD is weakening. It looks like we're in overbought territory, but not crazy. But when it comes down to each stock, you have to go study it, right? So last time we touched that red line, we had one of these. Last time we touched close to that red line, we had one of these. Last time we touched that red line, we had one of these. So since we're looking at from the beginning of this pullback of the markets in 2022, then everything has been failing at this red line. Red, fail, red, fail, red, fail. Now we're on it. We're on it again. Are we going to fail again? Is the question. Now, if we don't break the 150, if you don't break the 150, there is no movement to the upside. If you don't break this line, look, green line, that's the boss for Google. On the 3-year chart, 150 is the boss. Look, rejection, 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 everything, every time it's been getting rejected at it. If you don't break that line, there is no going up for Google. I would, if you want to buy it, I would put an alarm at the 150. If it crosses the 150 on the yearly, then you start looking at it. And some people say, oh man, but I'm gonna lose the bottom. No, you're not. No, you're not. Because if you end up buying Google, let's say it breaks the 150. Let's say it goes to hit this 115 and it comes back down. It touches the 150. It confirms that we're going up. And let's just say the markets at that time are in a better situation and they seem to be recovering and the Fed is about to cut and all that nonsense. Then at that point, you're buying this at $110. Let's say. Let's say you enter late at 116, 115. Why are you mad? Like why are you thinking, oh, I could have bought here at $87. Well, if you bought at $87, you are in the same pack of people that thought that this was a good buy because they bought without confirmation and they bought down here at 104 and then this thing went up higher and they were like happy, clapping, everything. Ooh, yeah, I bought it perfectly. I bought it excellent. And then drop. If you bought it here and you have a sizable account and you bought 500 shares of Google, by the time this drop, you're crying like a little baby. So why do you want to put yourself in that position? Why would you not wait? It's like, oh no, but I don't want to miss the bottom. Well, do you know markets? Because markets, when they actually move higher. They're not going to go to the higher point that it was last time. It's going to go higher than that. And so if you entered here and here, oh my God, I entered badly. Look at that. I missed. I should have bought here, but I bought here. Damn it. Who gives a shit? Look, the markets go higher. And every time they go higher and higher and higher and higher. So yes, eventually you're going to get a higher than 151. It's going to go to 160, 170, 180, 200, whatever it is going to be in 5, 10 years. This thing is going to be $300. So you're worried about missing the bottom when in fact you should be worried about buying too damn soon. Because if you bought here at this bar, you should feel terrible. You are right now probably crying in a corner saying, I hope this thing reaches here so that I can take my money out because I don't want to be part of the markets. I want to break even. I want my money back. And you're probably, your account is down 50%, and you don't want anything to do with the markets. Instead of doing that, wait for confirmation. Wait until the markets tell you, okay, this is the bottom. Now this is it. Beautiful. Don't try to catch the very bottom. You're gonna get burned. And don't get mad because you didn't buy it at 85. No, be happy because you need confirmation. Wait for a 150 to break, go up, come down, confirm it, get a 1 or 2 bars above it, and then when you look around and then they say, no, the Fed is about to cut and everything looks good and the banks are out of trouble and all these things are getting better and the yield curve is uninverting and the bonds are going, getting better, then you start getting to the market. Don't try to catch the very bottom. It happens every time. Everybody wants to catch it. Look, trend line for the yearly. Is it likely that we go touch this trend line again? Yes. Likely we're going to go retouch that trend line one more time. It's done it before. Why wouldn't it come do it again? Look, up, down. If you bought it here and it went up here and it came down here, in your brain you're saying, fuck, I should have sold it. I'm an idiot because I bought it at 83. It went all the way up to 102. I didn't collect any profits. I didn't lock anything. And now we're back down to 86. God damn it, I should have sold it. You're probably going to sell it here thinking that it's going to go lower now, which it proved to be a mistake. Then you probably re-enter right here. Say, okay, now it's going up. And it comes back down. You're like, oh, I should have kept this one. I should have entered there and stayed there. This is the issue. Over trading, you're going to lose your account. You're going to make a lot of mistakes. You're going to lose money. So stop making the same mistakes. Stop making the same mistakes. Do you want to buy Google right now? No, you don't, because you're smart and you're looking at chart and you're saying, no, I'm going to wait, because if it comes down here, then I'm going to see it as a buying opportunity if it bounces. If it bounces from that line again. What happens if it doesn't bounce, right? What happens if it doesn't bounce? Look at this. People were looking at this line. Traders were looking at this line saying, well, I'm buying here. Bounce. There's my rejection line. Okay, rejection. We have resistance and support. I buy here, I sell here. 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 You can make money, right? So what happens when it stops following the trend line? Look, beautiful trend line. People were happy, and then here some people went shorting, and then the market, and then Google said no, up higher, and then they freak out. They closed, and then they pull them back, and they're like, oh damn it, you got me. But next time I'm gonna buy here again, because you've been doing that for months, so I'm gonna buy here again. So what happens? There's your buyers right there. All the buyers gave you a little hammer, a little tiny hammer, which is saying, we're going back up, we're going back up. This time they rape you, and we go down, and then you're out of the channel. Now you're out. You're done. You don't trade that channel anymore, because look what happened. We tested that channel and they gap you down, because you failed at it once, you failed at it twice, and now we're going down. And you go down hard. Now you're at it again. Look, at it again. Are you back in the channel yet? Are you back into the channel yet? Nope. You tried to get back in the channel, rejected one more time. So this is the thing. You have to be aware that when things happen like this, you're probably back at this channel right here. Back at this channel right here. You have to wait for confirmation. Stop trying to catch the bottom for every damn stock. You want to catch bottoms? I'll show you what bottom you can catch. Look, CVS. Let's take a look. 3-year chart. Do your research, right? Do your research on the company. I'm not recommending you buy it or sell it. What you do with your money is your business. Now, this is one line that I made based on this support here. Now, if you do a trend line like that, it sure does look like it could go lower. Okay, just so that you know. Just so that you know, it sure looks like it can go lower. How much lower? Not very much from where it is right now. Probably 63, 64, 65, but it may not reach there. Sometimes it doesn't reach. But for anybody that is worried about buying it, this stock hit 113 or so. It hit there, it melted again, and now it's going down because they're spending money on Oaktree Health. So when investors hear that you're spending money, they don't like it, because it's going to be a longer recovery. Now, I just show you that line and I extended it to the right. You are trying to remount. You're trying to remount back here. You do get a fill candle. So is it Monday? Is Monday going to fill and come back down? We will see. Not all fill candles on CVS have proven to be, a significant pullback for several days, because this one was a fill candle, came back down and came back up, fill candle, one day down and back up. So that is what I'm looking at. The MACD on the yearly is still on a sell signal. So believe me, I'm only buying small amount of shares. I think I have only 50. Where is this thing? What do I have? I have 50 shares. I have 50 shares. Okay, I'm just nibbling. That's all. I'm not putting all my eggs in that one basket. Okay. Now, but does it look when I ask you guys, does it look like a good potential company that it can bounce for the next 3 years? Is it a possible bounce? And I just show you the other line that came down here. Is possible that goes to retouch that? Maybe. But maybe this wick right here is going to remount that line and go push on up again and hit around the 200 moving average. What happens if we break the 200 moving average? Well, if we break the 200 moving average, you had a chance. It came back down, retest, up again, retest, confirmed. Now you got your confirmation. Look, 1, 2, confirm, buy here, up. Now she goes. Now she goes over the 20. Now here, 20 and 40 just cross. How soon? January. We have seen this. We see it on the daily chart. I will show it to you for those that don't know and they're new. Look, on the daily chart, when the stock opens green below red, that tells you that the 20, which is this line right here, if you watch the first video, you will know the 20 is above the 40, and you got buying pressure. Momentum is upward. Look at this volume here on this bar right here. Significant volume when it comes down to when you look around a CVS. So there was some nice buying happening, even pre-market. Pre-market buying, significant. And then after that, it went, and look what happens. 20 crossed, but what did it do? Bounce back. Why? Because the 20, and we need to be aware of this. It's just because it crossed doesn't mean we're going down. It needs to cross and open up. And here it didn't open up. It was gonna open up and then it closed back up and then it crossed again. So you gotta wait for confirmation. One more thing. Let me turn the light on here, so I'm starting not to see anything. Okay, let's look at SPY just for the 5 minute, just so we can talk about it. We talked about this green line. That green line is the line in the sand. This is the reason why I went on puts right there, because I believe that there is a chance that we're going to get rejected at that line. We may or may not. Maybe on Monday, we get some bullish momentum, something happens, and we go and try to break it. If we break it, I'm going to close my puts, because that line, I think that's going to be the one that is going to hold this market down. If it doesn't hold it down, then I'm going to go to the other side and play whatever is given to me. Here, easy day to trade, guys. Easy day to trade. 20 over 40. Do I look at the 1 minute? I do not. If you look at the 1 minute, good luck trading. Who can trade this? Tell me. Who can trade this? Who can trade that? You gonna day trade this? Oh, across. Hold on. It's going down. No, it's going up. Hold on. No. Wait, up or down? I don't know. I don't know. This is MACD's green here, but it's bright green, and we're pulling back. So what the hell? How can you trade? Bright green, pull it on back. By the time you're like, okay, now it's going down. Now, okay, I catch this. But now you're stepping on the gas here on puts because MACD is growing, and so I'm gonna step on the puts here, and then it goes up, and then it's a mess, guys. Don't trade it. You're gonna get in trouble. In fact, 1 day 5 minutes works the best for me because it gets rid of all that noise. Gets rid of all that noise. Now, when you don't find a solution, when you have difficult days, zoom out a little bit further. 5 day 15 minutes. Look, 5 day 15 minutes eliminates a lot of noise. Look at this. Okay, before the day starts, 20 below 40 right here at 4 in the morning. Can you trade that on the futures? Yep, you can trade that. And if you want to be more conservative, you wait until this thing goes to retouch the 20 or the 40 one more time, and then you short it. And at that time, if you see that the 20 and 40 are getting wider and wider, you're in the right trade. Look what happens here when we open 20 below 40. It's been telling you since 4 in the morning that we're going to drop. Then it drops hard. Where do you find the bottom? Well, I have lines that tell me this was a stop. It went right through it. This was my next stop. I stopped on that one. So that line stays. I don't remove it because there's a reason it's there. Now, look, 15 minutes. It's a lot more clear. Look, here's the 20. You expect a pullback because it wicked out. The next bar gives you the pullback. How much of a pullback is the question? Should you get off here if you enter here? It's up to you. At some occasions, you need to just look at this and say, well, this is getting tighter, so I'm staying, right? But you probably had this picture only by the time you got here. So I don't blame you if you enter here and you lock in profits here. I don't blame you. I don't blame you for it. But then again, it continued going up higher. Why? Because the 20 is still below the 40. So you know, on the 15, you're not gonna stay on this trade because oh yeah, but 20 is below the 40. That doesn't matter. You have to at that point you zoom in. At that point you zoom in. The 20 and the 40 is for the initial momentum, the initial change, the initial boost of what's happening. How long it lasts is up to you. It's you need to start trying to determine how long that's gonna last. So just like here, right? 20 above 40 pushes on up. When are you gonna get off? Well, it would make sense that if you break the 50 moving average to the downside, then you know that the momentum is changing. You have the MACD here that is about to cross. It crossed there for you, and then you know you're in the right trade. You have support of the 50 and support of the 40, and it's going up higher. Great. Now you have to have lines. 413 is for me. Then I know I hop off. I told you guys around this area. 413, I don't remember. I told you guys this is coming to the area of a hopping off area, and I think is a good area to lock in profits, and I locked in profits. It went a little bit higher, and I was like, oh shit, I left some money on the table. But then 5 minutes later, I said no, I made the right choice. You cannot be greedy. So what I do, I am greedy, so I enter puts right there. At 413 and change, I ended up entering four. I don't remember 414s maybe. What did I get? I'll tell you right now. Trade all products. I'm owning. What do I own? I own June 16th. June 16th. I own. I own 413s. I bought 413s and I sold the 397s. Why? Because the delta is of 26. So below 30, delta looks pretty good. So it's a short play. If it plays out and we end up melting, then great. I'm already on it. If it doesn't play and it goes the other way, then I'll cut it. Simple as that. Don't stay on trades if they're going against you. All right. I'm not sure if I'm missing any other stocks, but I think I'm gonna stop it right here. Let me stop the recording right here, and we'll talk about it. Stop recording right there.